China's economy is going down, and it's all starting because of real estate. So in this video, I'm going to explain what's happening in China. I'm going to try to make this nice and quick. And I know this is Florida Real Estate TV, and this is about China, but here's how it's related. The Chinese cannot buy real estate in Florida. If you're a citizen of China and China only, you cannot buy. But let's get into the problems in the Chinese market with real estate and what's happening really. And by the way, my name is Mach Zara. I'm a real estate agent in Sarasota, and right now I am at the Quick Point Nature Preserve, taking a little walk. You're going to see some water, you're going to see some awesome stuff, some beautiful nature. This is in Sarasota, Florida. So you remember when the US housing market collapsed in 2008, 9, and 10? Remember when the banks got bailed out? And remember when everyone was buying a house, regardless of what kind of job they had, or even if they had a job? The Chinese real estate market is teetering on something that is so much worse than what we had. And don't get me wrong, it was really bad. Values in my area plummeted 50% in just a couple short years. And one of the things that happened here was that we were over-leveraged. We had people buying one house every 3 months because they just wrote whatever they did on their application and they got approved. Well, this over-leverage caused a huge problem for the global financial markets. And right now, China is over-leveraged 3 times more than the US economy was. Now, one of the reasons why they are so over-leveraged is because China only introduced leverage into real estate for the general population about 2 decades ago. So they're kind of learning from their own mistakes. Look, China had years and years of double-digit growth year over year, and this is before the pandemic. And this was largely due to an unregulated real estate lending market. Now, we are much more regulated, so the probability of that happening in the US is pretty small, but it could still happen. There are just so many cool places here so far. I just started my walk, and even though I've been here so many times, I'll tell you, I love it here. Well, it looks like a lot of audio did not get captured, so I'm just walking back to the car and I'm in the middle of this little mangrove forest. But let's resume where we left off. A lot of people are over leveraged, and in the States that is not the case. Many homes are paid for in cash. Lots of people have huge down payments and so much equity, and also very low interest rates. Well, that's not the case over there. You see, China relied too heavily on leverage and debt for their growth with real estate in the last, 2-3 decades or so. And due to that, it's not that it just created a bubble, it also tied up the general population's money and their wealth into real estate. And mind you, the Chinese people have never had such a time of prosperity before. So everyone feels like they're very wealthy. And what happens when you feel wealthy? You spend. What happens when you spend? Well, the economy grows and the economy does better. And all the numbers look good and everyone's happy and more stimulus happens into the economy, interest rates, everything just looks good, right? But right now, it's not so pretty anymore. But see, right now, defaults are plaguing the entire country. And the industry as a whole is really in deep trouble. You see, in China, the real estate market makes up for 25% of the country's entire GDP, the gross domestic product. And for the citizens, it makes up of 70% of their wealth. The people who are suffering are actually the general public. Which ones? The ones that took a risk. The ones that took a loan out and bought a property. The builders kept building, and the way it works in China, which is a little bit different than in the US, is that the builders get paid once they sell the property to you, but they sell it prior to building. So here in the States, you can get a contract. You can put a deposit down, some small amount, 10-20%, but you don't actually close on the property, and the builder doesn't get paid until it's closed, until it's built, certificate of occupancy is issued, and all the money has then been transferred. And in China, it's not like that. In China, the builders get their money as soon as they go under contract, and they get the money from the lender, and now you are paying, as a borrower, as a buyer of real estate, you are paying your mortgage debt every month as it's being built. So the incentive for the builder to build really quickly is not really there, not like here in the States. And now what is happening to these developers? And before I tell you, take a look at this. A little place has a nice view of Longboat Key. Absolutely beautiful here. These are mangroves protecting the shore. Let's get back to our walk here. So the two biggest developers in China are Evergrande and Country Garden, and just those two developers have a total of $500 billion of debt. That's $500 billion that they have defaulted on. Now, Evergrande just got ordered to liquidate in a Hong Kong court so that they can pay back, as much as they can from the liquidation proceeds of whatever they have left. And if you compare it to the United States Great Recession that we had in, beginning in 2008, okay, we're going to go out to this pier here. What we had then was all of the banks combined. They had a total of $800 billion. So it's actually more that the U.S. had in terms of the debt, but we're just talking about the two biggest developers. And I'm not comparing the two biggest developers in the US, I'm comparing the entire US housing crash compared to just two developers. And as you may remember, what did the US do? Well, the US government came to save the day. They came to give some stimulus to the banks, and they lent them a whole bunch of money to help deal with these troubles, and so that they wouldn't go belly up and have a bankruptcy, on them. But is China's government going to do such a thing? Well, we don't know. They do not do it like we do it. So the general consensus is probably not. China is probably not going to pump government money into private firms to save them from collapsing. They're probably going to let it all collapse. And we don't know for sure. We'll see how that plays out. All we know is that so far they have failed to provide any stimulus. But these defaults then escalate into the local level of the governments, because you see, the local governments collect the taxes on all these things that are happening, on the property taxes, on the build out, the impact fees, all the fees for building, everything. And right now, if you're not paying your mortgage, you're probably not getting too much money from the people. And right now, they are suffering because their revenue has gone down drastically, which is going to prevent them from being able to provide all the services that local governments are required to provide. So first, the real estate market is crashing, and then the local governments are going to start crashing. So now the real question is, how is this going to impact the US economy? If the economy of China starts to collapse because they have such a large percentage of their GDP linked to real estate, will it affect us? Drop your comments. Is the government of China going to try to do something to make up the losses by, charging and imposing new export taxes or import taxes on American goods? Like there's any at all. I don't think there are any, or very few at least. What are they going to do? Are they going to go and team up and try to start a war? Are they going to call the debt due that the US government has with China, which is a very large amount? How do you think the Chinese government is going to deal with this in relation to the US? Are they going to take it out on the US? Because you see, China's real estate market and the loan process and everything is just a couple decades old. We've been doing this for much, much longer than that. And I don't think they have 30-year fixed rates either. So as the global interest rates go up, so do the people's payments.